All right, let's kick it off with a bit of DAX, shall we? Just roll through the regular process. So we went above last month and we've got a little over a week. So that was the breakout point, monthly high, high one, and breakout point. And we've come back to test it. We had weekly buy, bar. Looks like it's a week, but it should be weekly. Weekly buy signal bar, a couple of legs up. Okay, so move that to weekly and this to daily. So breakout, gap closed, another breakout, gap closed. So it's basically a second entry short, or a kind of second entry short, but no one wanted to sell below that bear bar as yet. We haven't gone below that bear bar, at least on the Globex. We're on the RTH, so let's have a look at the RTH chart. So it's basically a second entry short. No trigger. So that triggered, that hasn't. So we're probably going down there at some point. So that's going to be a magnet. That's going to be a magnet. What do you do if you're a bull here? Well, you've got a bull inside bar, and this was fun to trade yesterday because we did the same thing on DAX that we did on ES later on, which was we've got an inside bar. No one wants to buy the close. Where? And you put a stop down where? I mean, where's your stop going to go? There. Doesn't make sense. Probably need to stop down here. Too big. It's just not great maths for a long trade. But the short trade makes sense. The short trade was the exact opposite, which was, well, wherever we open, look for some reason to sell and try and capture the swing down. So let's switch that to 60 minute. Let's switch that to 15 minute. So yesterday, big bear bar. It's my best American accent. Let's make it red. So that was a breakout point. So we tested that breakout point. So we're in the middle of yesterday's range. And the question will be, do you sell with a stop up here, betting that we'll go below that low? That's possible. Or do you try and look for a buy signal to get back up here? I think the short side looks a little bit better at the moment. Let's have a look. So that is a swing point. So we've got bear stop. I mean, could be there, somewhere at the moment they're both intact. So we've got bear swing stops intact. We're in the middle of yesterday's range. So I think that'll do for now. We're at a magnet. Yesterday I thought this was the spike that we broke out of. We didn't actually get all the way down to where we should have. So if you bought the close of that bar and you were looking to scale in, we didn't actually go all the way down there. So that was kind of interesting. So it's not as bearish as it could be. And that means, you know, if you buy there, you buy more there, you can't scale in down here. So now you're back at your entry. So your break even could be where we need to go. So that's 60-minute bull mid, exit break even. Okay, let's get rid of that. That's good. Okay, I think that's enough on DAX. At least to set up a trade. Bears haven't had their stops run. Bulls have. Okay, let's take a look at good old FTSE. So we're in a monthly bull channel. We had a bear inside bar and we had another high one up here. So if you're a monthly bull, you got a bull spike, you got a pause, and now you've got a buy signal. So traders will buy one tick above it, and all of a sudden, oh, it's a bit disappointing. And now we need to get back to that price, and we haven't done so yet. So I think we need to get back up there. What was that high? That high is 95.58. Yep, not enough. So we've got the high one. So FTSE, I think, needs to get up there. Weekly chart, really tight trading range. Bears couldn't do anything there. Testing a breakout point, but I mean, small target above, larger target to the moving average. Okay, so let's put weekly there. Let's put daily here. That was an open gap, so I think we need to close it. But that might close before the session opens. Then we'll be back at the moving average. So I don't think we're going to get anything interesting from the daily chart just yet. Let's go 60-minute chart. Okay, so what do we have here? We have essentially a bull channel that we broke out of, and we might be heading back to the other side of that channel, which is where this bear bar failed and reversed up. Bulls will try and get some kind of a wedge. Where's the swing point? Well, the swing point was here. That got taken out. Then top of a trading range. Bears need a lower low here. Thing is, you've got open gaps here, you've got breakout points. Very climactic. Big move down, big move up. Wonder what's sitting below that bull spike. If traders are going to buy below that bull spike, because that's a pretty strong move. Otherwise, where are open gaps? Open gaps are down here. Lots of consecutive bear bars below the moving average, so that's not good for the bulls. Yeah, looks like FTSE's going down. Let's just have a look at the overnight. It's always good to check ETH, RTH, just to see if there's anything that we've missed. So you can see on the daily, big swings up and down. So daily chart, not a great place to trade. There is one more gap here. And that could be the magnet. Does that gap exist on this chart? Kind of. It's like a body gap down there. Okay. Kind of, sort of, not really. But we'll put it there anyway. G'day, Atomic. How's it going? Just working through a bit of FTSE prep. What's the average bar range for FTSE at the moment? Let's take a look. So if you look at the average bar range on the daily charts, about 70 points on FTSE. So if we measure 70 points, that's where we can go. And we can go there in any kind of up-down loop-de-loops. It would be simpler if it was a direct move down, but could also just stop, reverse, and because this was strong. We had consecutive bull bars, broke above everything in here. You can see it tested that highest buy signal up there and came back. So okay, that's a possible. That's a possible. What about on DAX? If we go 24-hour chart. Oh no. This indicator is just measuring the average bar range. So you can measure ATR, which is average true range, or ABR, average bar range. One includes gaps, one doesn't. So here you can see the average of these bars is 170 points. So if that's yesterday's close, can I get 170 points? Yeah, that'll do. Okay, so 170 could put us up there. Aye, too big. Oh, come on. Now, it can also be an inside bar. You know, we don't have to do huge moves, but you can see big move up, big move up. So you can also break up and go sideways. Let me just set, okay, so we've got DAX setting up, or set up, that's good. We've got FTSE set up, yep. That's good, we'll get rid of that, get rid of that. Okay, let's just leave that for the moment. Just set up my trading terminal. On the overnight, FTSE is in a bear channel and DAX is sideways. Okay. A question from Atomic Rage. I'm going through the Brooks trading course. Wonderful. Again, even better. I have a question about failed breakouts. When we have a reversal of a bull breakout, big bear trend bar, is that only when we call it a failed breakout, or is there a tight trading range? Then also we can label it as a failed breakout, or should we look at it as a pullback? Atomic, can you give me a chart? Or tell me a bar number. Give me a, because I can give you a general answer, but in things like breakouts and failed breakouts, it's very specific. So I'll leave the FTSE chart if you've got something on here. Plenty of failed breakouts here. If we want to talk about breakouts, we've got to talk about gaps. We've got to talk about overlapping bars, trading ranges, and then we put it all together and then decide what kind of trade we're looking to take. But yeah, I'll leave the FTSE chart up here. So if you've got a bar number or something on here, you just let me know and we can go through that. Bar 18 here. I think so. There's no other bar 18, right? Yep. Okay, nice. So what you're saying is, so let's just squeeze that up, get rid of everything else off this chart. So let's talk about breakouts. So this bar is breaking out of this range here. So at this point, it's created a gap. Okay, this is what we call a breakout gap. Now, the moment there's a breakout, we call that a breakout. As long as this gap is open, we call it a breakout gap. When this gap closes, we call it an exhaustion gap. And sometimes if that gap stays open, we might call it a measuring gap. We might use it, you know, like this gap in here as a way to measure it. But let's just ignore that for the moment. This is a breakout gap. It immediately pulls back and it leaves a small gap, right? So at this point, it's a successful breakout and there should be more down. Now, it's forming a tight trading range, so this can close at any point. It doesn't have to stay open. But at the moment, it stayed open, so we should go down a little bit further. Did it reverse soon? Okay, now this has closed that gap, and this has created a new breakout gap between this bar and that bar. This bar gets followed through, so this gap stays open. You can see I've got a little gap indicator, which then highlights that, and that's a sign of strength. You can see in here, the bears didn't have a lot of strong gaps open between bear bars. Here's a bear bar and a bull bar. This is a stronger gap because it's between two bear bars. So on a higher time frame, it's a stronger signal. So if you want to reverse a breakout, usually what you need is a tight trading range. Let me just copy. Let's just make a copy. So now I can get rid of all the writing. Okay, let's get rid of that. Get rid of that. So the sell below 15 was not a good idea, and that's because that close is at the same price, so there's no breakout. So this is what we call a beginner trade. Trader sells one tick below that bar, and then all of a sudden they're like, oh no, what am I doing? Hang on, it's going the other way. I thought it was a breakout. And it may have broken out of this range, not really. It didn't break out of really anything. And so traders often wait for a breakout and follow through. So a close below and then a close below that. So two closes before they're convinced we're breaking out. Is this helping so far? Yeah, a lot of gaps are temporary. And if you think about the two different kinds of traders, so there's a stop entry trader that is trading on a breakout. A trader buys above 21 and they're hoping for the market to go higher. It goes higher, they can make a profit. But there's also traders who are doing the exact opposite. There's a limit order trader who is selling above that bar, right? And they're selling a measured move of that range higher, hoping for that gap to close. You see how they made money? So they did the exact opposite, selling, sell higher, and that gap closed. So as long as gaps are closing, we say that limit order traders are making money. Now, let's have a look at a different example. What about a trader who sells above that bar? They sell there, they sell one range higher. So you sell there, you sell more there. Oh dear, what's happening? Now I've got two positions. Yep, one's at 0, one's in negative. I wanted it to go down here so that I could make money on my second position, but they got trapped. Exactly, they got trapped. And so that open gap is a sign that traders lost money. And so what happens is when price comes back to it, and price never came back to it, which is a sign of how much bears lost money, is that forms support and resistance. So you can see the same thing here. A trader sells below 5, or they decide to sell above 5 and a range higher, but it never came back here, so they took a small loss. They had a profit, but they also took a loss. And if they're taking losses selling, they're probably going to stop selling above the high of the next swing point. So that's like the foundation of gaps, breakouts, and failed breakouts. Now, what do we do in terms of trading? Well, in general, let's just pick a part of the chart that we don't have, and let me just pick a random bar over here. So I can't see what's to the left. Okay, so now we don't really know what's to the left, and don't really know what's to the right. What do you do here? Well, these had a breakout of that range. No, it didn't break out of that range. That had a breakout of the range. A couple of strong bear bars. So this gap should stay open. If bulls are able to overlap and close that gap, what's going to happen is bulls are going to buy below it. Okay, because they can buy below things, scale in lower, make money. If this gap stays open, then we're probably going to run the stops of those bulls. So can they get the body to close? So they closed all these gaps. Now what should happen is if we go below that low, traders should buy there and then buy a measured move down. Let's see what happens to them. Yeah, so they buy, no problem, no problem. See that? So this style of trading is a little bit more technical because you have to see where the breakouts are, you have to judge the strength, and you might say, oh, look, it's the third push down. I don't think it's going to work out. But the other side of that trade is what happens when it breaks out strongly. So you're like, yeah, no worries, I'll just sell above there and sell higher. Okay, but then when you see that, can you still manage your trade without any emotion? Or are you going to be pretty emotional? I'd be pretty emotional if all of a sudden there was a 40-point bar. I'd be like, wow, I really read that wrong. You know what I mean? That stopped me out in less than one bar, you know, because the stop's up here. So that's it. That's it. So you can that style of trading is actually high probability, but the times when you lose are always big. And so all the little wins and scalping you get done, just monster loss, and you'd be a bit upset. So, but yeah, let's try and use it today for trading because it's a really important concept, and it's like underpins high probability trading. So, okay, so market's opening in 30 seconds. I mean, technically the pre-market's already open, but now, if you can trade small and you're comfortable sitting in those losers and just, you know, you're just scaling in, you know, people are going to, you know, traders are going to get out with profits, and, you know, you can kind of flow with the market. Great, but I think that's a personality thing. So let's just recap what's going on. What's the market structure on the 60-minute chart? Well, we're in We're in a broad bull channel because we're breaking out above the high. See, there's a failed breakout. Sorry. Get my snapping on. Failed breakout, another failed breakout. So 2 attempts to break out. And so when we look at a failed breakout, 2 attempts is a really important principle. So tried once, tried a second time. Okay, go this way. I saw the message briefly. It was about what setups to focus on. Low risk, big reward. I would do the opposite. So you can see in that sentence, you haven't used the word probability. And that's what is missing from most traders' strategies. Everyone's focusing on how to have the smallest risk with the biggest reward, but most traders can't actually trade that way because that means most of your trades are low probability, which means you're going to lose most of the time. So you're going to win 4 out of 10 trades and you have to hold them for big profits. And my experience, my own experience could not do that for many years, and most traders I've met can't do that. That is like purely swing trading, and I think it's an advanced strategy. So the alternative is high probability trades with equal reward to risk. Yeah, so if you're not very good at holding trades, then I would basically not trade in that way. Find something that suits your personality. I'm not a great swing trader. I usually scalp in the direction of the swing. So I'll have a position on and then I'll add, take off, add, take off, add, take off, close. So I'm trying to get the swing entry, the lowest possible buy, the highest possible sell. And then, if I get it or not, I don't care. I just want to see the swing set up and then trade in that direction. So in the course, Al talks about always in. So for the bears on the 60-minute chart, big bear spike, and it's basically a double top, and all double tops are basically bear flags. Bears looking for a sell signal here, I think. And as long as this stop location, because they got a new low, so that's now stops can be pulled to here, and as long as that does not get run, then it's a 60-minute sell. I said earlier, for those that have just joined, that bull bar here is a really good buy signal that failed, right? Great looking bull bar, above the moving average, highest close. I mean, the only thing you can do is buy, but it didn't work out. It did not go 1 times that bar down. Okay, if I measure, it did not get there. So those traders did not have to scale in. So they're coming back here and they're deciding what to do. The other way to think of that is that bar itself is a trading range and we broke below it. Tested, kept going. So yeah, there's a lot of info. That's why I created drills for myself, and that's why on the YouTube channel I've just been posting those, going back through my old notes and trying to write them in ways that are kind of fun to practice, and showing people, hey, you look, I had to take the course and make drills because they were weak points. The video I posted today, I mean, yesterday was a plastic example on ES, right? So we opened here, and this is what, 15 points, 10 points? Yeah. So it's a 10-point range, and we know ES moves 50 to 60 points. So I have to shrink that. So ES can move 50 points up or 50 points down. But if you're in this really tight range trying to scalp, oh yeah, 2 points, 3 points, none of that matters because at some point we're going to break out of this range. And on the daily chart, it's a bull inside bar. No one really wants to buy above that. And that means we're probably going below this bar. And if we go below that bar, well, we're probably going at least 1 times that range below that bar. Okay, because if I'm a bull and I don't want to buy high, I also don't want to buy too low. And look at where that bar is going to stop. So, see how we went 1 times that bar range? So if you're here and you do your higher time frame drill before you come into the session, you're like, okay, don't worry about bias here. If it's going to be 50 points up, there'll be 15 buy signals. But when you start printing 3 bear bars, you're like, oh, okay, we're going down. Okay. Anyway, so that's what worked for me. Okay, so that's the first magnet. So we broke out of the top of the channel. Now we're breaking out of the bottom of the channel. So we've hit those 2 magnets. So they're gone. Now we've got a lower low. So lower high, lower lows. So we're in a bear trend. And then this will be the breakout point that might need to be tested. Couple of legs up, sell for a wedge, or it's just going to be a big bear day. Bulls want this to be a failed breakout and reverse strongly, close that gap and go up. So DAX. So DAX a bit different. We're going sideways here. So can you see that this spike and how we tested the breakout point here, just bear with me, let me get that pointer back on. Pointer. No. Bear with me, let me just put this pointer on. So here we've got a bear spike and we pull back to test this breakout point here. On FTSE, we've got a bear spike. Are we going to come back and test this breakout point or just keep going down spike and channel? $8,300, big round number. Okay, so this is looking like a good target, but I just don't want to sell to it if it's all the way down here. Okay, so consecutive bear bars. Okay, so it's probably a sell. So what some traders will do is they'll try and get a pullback into the top third of a range. So they'll get a 2-to-1 if it works, which would be the low of 1. It's probably going to trade like a channel because this whole environment's a trading range. So it's probably a case of have one size and then add on. Might wait and see what the 15-minute chart is. Talking about the setup, yeah, and then it fails. And that's the thing, because the market cycle's always changing, and whatever the setup is, it's got a certain hit rate. You know, it creates a certain number of setups a day, and you know we don't know what the performance will be. We can just focus on execution. So that's really common. Do you want to tell me more about the setup and how you're trading it, or you can give me some bar numbers? What instrument? Maybe we can talk through it. So I haven't sold short yet. I'm just going to wait and see what happens on this 15-minute chart. Oh, g'day Anders. Thanks for joining. Want to see, is this gap going to stay open? Is it going to close? So the bars at the moment are 8. Average is 8 points. Because we're around this big round number, 8,300. So okay, so inside bar. So traders are going to want to see the follow through. I'm not a big fan of catching falling knives, as they say. I generally just try to follow where the breakout's going and trade the second leg. And then if I'm wrong, I'm wrong. Spike and stop order entries when the market transitions. Yeah, after a couple of legs, I mean, if it's in a trading range, they're going to fail a lot more. Spike high one, spike high one, spike high one. But then by the time you take that high two, you've already had 3 entries. So that's usually the time when they start failing. We'll see if we get an example of that now. So if this turns out to be a bear bar, traders will sell under it for a spike down. If it's a bear bar and reverses, then we know that we're in a trading range environment. So 1 got bearish follow through, 2 did not. So that's more in line with the bear channel. DAX. Okay, so DAX has got consecutive bull bars closing on their highs. So I said with DAX, sellers are probably not in the middle here. They're either higher, buyers lower. And if you take that across, isn't that interesting? In the lower third of yesterday, there were buyers. So traders were happy to buy here. They might exit there. They might hold for 2 to 1, but it could be a swing long on DAX. You're in the middle of yesterday, so I'm not going to do anything there. I'll see if see what we can do there. Yeah, practicing second leg breakouts. Which instrument were you trading? ES, FTSE, DAX? Just let me know, and we can take a look. Let's just compare FTSE RTH with the overnight. Very deep pullbacks. So this is not a good environment for stop entries usually. Pullbacks that are 2/3. At the moment, this one's a bit better because it's only 50%, but it's forcing you to sell right where traders are kind of confused. There's big tails below bars, which mean bears were able to push price down. So I certainly don't want me to be a buyer above anything over here. So if there are bulls, they're probably bulls below, which means that there's targets below. So the target might be 8277 for that sell. Bears can argue, hey, look, you've had a couple legs down. 1, 2, 3. I think they broke below that, though. So, yeah, if you're in trading view, you can just go up here and go copy link and then paste it. That's the only way I know how to do it in trading view. I'm not sure how to do it in other charting platforms. Otherwise, you can send it to me on Discord. Okay, so big bear bar on the 15-minute chart. So FTSE, the bears need some kind of follow through. I'm not in a rush to buy here, which might mean I'll miss the first move. I like these bull bars. I think that's great. We're to close. I'm just concerned that the buy zone is here, 19,630, and I prefer to be a buyer here. Less so up here. Similar to yesterday, this kind of pattern, you know, it forces you to buy high, reverses measured move down. If that's going to be setting up, I just want to be the link, I can't see the link yet. Can this be a sell climax? Possible low of the day? Yeah, you know, 5, 6, 7. If we're just going to start printing bull bars, a lot of the bears will expect one more bear bar and then we'll exit. But we just broke below, I think, significant swing points. So we'll see. A lot of the time when traders trade a channel, say you sell there and you got to stop up here somewhere, 50% of the way to your stop or 2/3 of the way to the stop are often scale-in locations. So that way, if you get back to your original entry, that second trade has 1-to-1 or 2-to-1. This is 2 legs on a smaller time frame, so we'll see what happens here. I took a small position short above 2. Atomic, that's another failed breakout. So breakout and then close the gap. So it's now closing all those gaps. So looking more like a sell climax at the moment. I think this bar will be important. Bulls have got the small risk, big reward, you know, back to the moving average, closing that breakout point, closing that gap. And bears have got a further stop, so they've got the probability. Atomic, are you on the Brooks Trading Course Discord? Okay, so DAX able to create a gap here. I'll be in blue. Tim F, I'll be in blue. So trading range on the daily, we've closed that gap. Yep. Now we're going to find out what traders want to do at 8,300. Oh, I'm offline. Yeah, just give me 1 sec. Let me So lots of bull bars. So you can see spike too big, difficult to, you know, sell for a breakout. It's more like a channel. So if a trader sold below 1, we should get back to that low. We might even get back to the 2 close. We'll see. Lots of bull bars. Can you buy here with a stop to get up to the moving average? I think it's better just to follow the momentum. So we'll see what... Nice. Oh, you sent a message. Yeah, nice one. So back to the close of 3. So we're short above 2. Can you take some off testing the 15-minute bar? Yeah, I think some traders will, just to, you know, just scalping back to that close and just wait for more information. Can the bulls get another bar up? Maybe. That was the last sell below 1 on a stop. And you can see we didn't sell on a stop below 2. We went above and we've come back to that stop location. So it's okay to take profits there and then wait for another signal. Yeah. What's that, 6, 7 points, whatever. So it's a strong spike, but rather than taking the breakout trade here, you wait for a sell above, betting we're going to test magnets. I think it would be better to sell closer to breakout points or be swinging long, at least on FTSE. What's happening with DAX? If DAX is going to go up here, then we're going to break out of this massive range here. I can't really draw any more lines, otherwise you'll get upset. There's already too many on the chart. So breakout to a new high. 6 is not a high one. Can't buy above 6. Will 8 be the high one buy? Forcing you to buy in the top third of yesterday's range. So if we go below 7, that is a low 1 sell. Because of the distance to the moving average, okay, your stop is 30 points away, so traders might wait for a low 2. Nice, mate. I got your message. That's great. I'll take a look at that later on. Cheers. So if you do a lot of breakout training, you have this. This is a breakout. It needs a second leg. But also this is a breakout and this needs a second leg. The result is often a triangle. Same thing here. Strong breakout down needs a second leg. Strong breakout up, but counter trend, still got its second leg. So bulls have run the swing point of the bears on DAX on the 15-minute chart. So they're looking for a measured move of that whole range. Well, does I move this backwards? Up there, which is up to that yellow circle. So we don't need to put anything else on there. Okay, so there's your high one buy on DAX, but if you're taking it, you've got a wide stop. I'm going to wait and see if I can buy closer to the moving average. Can I do it on stream when you're flat so I can play it back again? Oh, you mean, yeah, talk through the chart? Oh, yeah, that's heaps easier. No worries. Okay, so on the 5-minute chart, that's the high one buy. So where's the bull stop? Probably there. So that's the buy. That's your target that they're going for. And their stop location is probably here. Can the bears get a sell signal? Did not trigger below 7. That's one of the things I noticed about the spike high ones, spike low ones, is that when you don't get that stop entry on the next bar, it's reminding you that it's got a channel shape to it. When I was the world's worst trader, I would always be selling at the absolute lows and then would obviously get out of my trade on the pullback, and then it would go to a new low. I would sell again. So I'm selling 3 times in a bear trend and I'm taking 3 losses. And you think, how can you do it? You can, as long as you sell at the lows and exit at the highs. Sell low, buy high. Yeah, so that's how a channel works. So if you think about a strong breakout, here is a breakout and follow through, but it has pullbacks. So if you are taking the breakout entry, you only take it if you can sit through a pullback and not close and just rely on your stop. Otherwise, you trade it like a channel. You trade small and you're waiting to add on the bigger size. That's how I fix that. Okay, so DAX taking off. As high as 689. Will I short below 7 on FTSE? No, if it doesn't trigger on that next bar, then it's no longer a stop entry. You know, selling on a tick below or buying above a tick above. So you just got to wait for something different. DAX. So traders are buying above 8. So if this pulls back into this area, traders will have a second chance to buy around there. And if it doesn't pull back, that's a sign of strength. So traders will put orders in the bottom half of this bar, just above that breakout point, somewhere there, with a stop down here, hoping to get up into that range. We're also in the top third of yesterday, so we're going to give our first idea of what higher time frame traders are doing. I'll just get rid of those lines because they're a little bit annoying right now. So we broke out and now we're testing the breakout point. So we can see that the strong buyers in the lower third of this trading range and strong sellers in the top third of this trading range. So if a bear on the 60-minute chart had a stop there, it just got run, we just overlapped and closed any gaps. So it's trading range behavior. So if you take an entry like this, which is more of a breakout entry, you want a size to add on lower to make your points, I think. This is also a breakout of the bigger trading range. Which one on FTSE? That's essentially a low one on the 15-minute chart. It's just not a great signal bar because it's an II and it's got a big tail. So Bear's trying to get a second entry sell here on FTSE. They got 1 minute. Some bulls that bought there are going to try and buy the close or buy lower to get back out at the 8 high or the 8 close. So big bear surprise bar. So you've got trading range behavior. The DAX bulls below 2 or below 1, somewhere down here. Usually bulls want to put it below a bull bar, but you can also, you know, if it's the open of the day, you've got a magnet that's kind of a scalper way. A lot of traders will just use that. If it's a trading range, you often want to put it one support or resistance zone away from that. It generally runs the closest one and then pauses. So bear's creating another stop entry sell below 10. If 11's a good looking bear bar, I think it's also okay just to exit and then you just take a small loss and then just wait for another signal. Isn't that measured move target now obsolete? Which one? Well, the one for the original trade is the trade parameters, you know, entry, stop, target. I like to at least try to get a swing if one's setting up on the open, because they'll often pay for all the losers. Otherwise, then you're just scalping the rest of the time. So, okay, so consecutive bear bars. So, okay to get out of that trade. If it goes below that bear bar, so if it goes below 11, I'll just pull my stop up to under 11. I don't want it to break out a second time. And I've put my, up to you, you can put your profit target back at that entry for break-even exit, or you can just rely on your stop and sit in the swing trade. Usually you want these entries to have a tail on 10 and a pause, but when it comes back and overlaps, then this breakout trade's not working. Very small follow through on 11. Interesting. Okay, so channel FTSE. Okay, so I'm out of DAX. $60-minute chart. Not a lot of buyers above that bar. So what do you do here? Look for a second entry short back around here. Will that have a second leg down? Bulls are stuck above that bull bar. So I wonder if other bulls will be buying to get back to the midpoint. if I'm a daily trader, that's my 50% pullback of that bear bar. Okay, FTSE new low. Yeah, so the bears have got one close below. So they need 13 to be another close below that low to convince traders to keep selling on the lows as opposed to waiting for pullbacks. I wonder how big that pullback was actually. Okay, so it was 50%, exactly. I expected a channel because we've got a lot of trading range price action. So bulls on DAX are probably waiting for a buy signal to go back and test the 8 high, maybe the 9 close. You can see strong buying in the lower third and strong selling in the top third. "60-minute chart, I don't really want to be buying in that tail. "15-minute chart, is this a breakout test for another leg, or is this going to confirm a failed breakout?" At the moment it's looking like that breakout's failed. So we've had a 60-minute bar. DAX had a 60-minute bull bar. So probably no buyers until the lows. That might be what traders are doing here, selling for those lows. Can they get, the bears need a minimum bear bar. They really don't want that. So even though that's a small bull bar, bears really needed that follow through. So that's a good example of a failed breakout. So 15-minute bulls want a high 2. So FTSE might be sell above a bear bar or just wait. I think I might just wait. Yeah, pullback more likely. And this, see this pullback already had 2, so it was low 1, low 2 triggered. So it's automatically saying wait for 2 legs. Some scalpers will take the counter trend trade and they'll trade both ways. I tend to not do that. I'll just pick a side. Okay, so DAX has no gaps open except to the upside here. If we drop a fib on it, it's about a 50% pullback. So bulls need to do something good here. I don't want to be a 60-minute bull on DAX. Well, 15-minute chart just instantly closed that gap. So how can you structure a trade here? I think there'll be sellers up here. So buying 8, having a stop at the high of the day, you can scale in at 50%. to get back to break even. Some of those bulls will be trying to get back to that bar. Sometimes I'll trade that way. Other times, if I get a breakout against me, I'll just get out of the trade and take the loss, look for something else. Look at that, huh? So see how important that breakout follow through. That's a great example for you. Now you can see how important that confirmation is. Huge high to bottom on FTSE, but now a huge bull bar. So some traders might buy small, other traders will wait for a pullback. So even on bar 2, you know, if you play back the live session again, you could see how that was giving us an indication that it wasn't a strong breakout. Because we never went below 2. And then we pull back, the low one didn't trigger, the low 2 triggered. So it's already acting like a late stage channel. Is 14 by the close? Yeah, well, it's an attempt at a double bottom. You know, stop below the low and see what happens, possible swing. I suspect we're just going to keep doing a bit more of this stuff, but let's see. DAX is in a broad or trading range behavior. So on the 5-minute chart, there are no gaps open. So breakout, close, breakout, close. So you can argue this is a trading range and it's slanted, and that's what we call a broad channel. So a broad channel usually has legs in both directions, so it goes always in long, always in short. Here, there's not a lot of bear bars below the moving average. You know, so there's ways to draw this channel like that, but I would just call it, you know, trading range behavior. Looks like those bulls got out. They buy there, buy 50%. Looks like they got out there on DAX. It's interesting. Bulls really need to take out a swing point. What can the bears do here? Can they maybe get a measured move of that range? Let's say we have a bull breakout and follow through in FTSE. So if I'm in a bear channel and I get a bull breakout and follow through, it's starting to turn that channel more into a trading range, which means traders are buying at the low and scaling in. So it's like a bit of push and pull. So back at the open on DAX. Let's get rid of that. Get rid of that. Get rid of that. Market's deciding, is this going to be a high 2 buy, spike, second leg pull back up, or is the market going to do what it did yesterday? Similar pattern, right? Spike, strong reversal, but lots of good bull bars. It's technically a low 1 sell. You got a spike to a new low and a pullback 15. It's a bit easy to see on the 15-minute chart. So if you bought the first 15-minute bar with a stop down here, you're back at your entry price, which is where we're going sideways. And if you sold this signal bar or sold on a limit order, now the market's fighting on DAX. 2 minutes into the bar on FTSE, you've got a new low and then a low 1 sell signal, but the market is saying, why can't the bears get strong breakouts with follow through? How come as soon as a bull doji appears, the market shoots up 10 points? I think you asked about how to trade a channel. So in a channel, I wait for a signal to trigger. So if we're short, signal to trigger, and then I sell above a bear bar. And if we're long, waiting for signals to trigger and then buy below a bull bar and look to scale in. So for example, instead of buying above 8 or 9, you buy below 8 or 9 with a wide stop, and then you're looking to add on lower. And that's because in channels and trading ranges, gaps close. So if all of a sudden there's a breakout against you, it's likely we're going to go and close those gaps. Bears are trying to keep that gap open, because if they don't keep it open, well, we'll just close and we'll just keep going in a channel. And if you get kind of dizzy and confused, you're like, oh, is it a breakout? Is it a trading range? The market's most of the time in a trading range. So if you can make that your default, you know, confused is the kind of default. Just say, okay, it's 50-50. You want to either wait for 40% for a swing or 60% for a scalp. And avoid tight trading ranges. and that should fix your hit rate. Well, if 10 is the low one, traders are still in this low one cell. Their target's down here. Will bulls create another bull bar here, or will we just keep chugging down? I'm currently flat. I'm waiting for... do I want to trade that high 2 on DAX? Maybe. That's 16. Okay, FTSE got consecutive bear bars. Two points. They really need to do more. Yeah, they're hesitant. It's trading range behavior, you know. Go above, reverse. Go below, reverse. Spike, pause. Spike, pause. And what it will do is that every time you take an entry on a stop, it will do something to shake you out of it. In strong trends, price immediately goes, or small pullback goes. Small pullback goes. But in a trading range, you know, breakout, reverse, breakout, reverse, breakout, reverse. So if you're getting upset, you're probably loading too much size on a stop entry and you're not prepared for it to come back. Can bulls get another bull bar above the moving average here? So a little bit slow. Scalp on FTSE, small loss DAX, and now just waiting. The 15-minute chart does look better for DAX. Like that's definitely one thing they have on their side. It's just not in a rush. So stop entry above 8. I mean, 9's by the close, you know. Bulls can get it up there. So let's see what happens. Can this close as a bull bar on DAX? So now you've got consecutive bull bars on DAX above the moving average. So 3 bear bars, pause. 3 bear bars, no new low. If you sold the close of 12, they could get out. Bulls needed to go above that bar. On Nifty. Let's get RTH. Why are my bar numbers so unusual? So same thing as FTSE. You never got 2 closes below that breakout point. 43 was when you got your close. So as long as the bulls don't go above 43 and force those bears to kind of adjust their trade, probably still going down. But the issue is now it just keeps coming back to this price. It's just giving everyone a chance to enter there. So, you know, bears need to do something here, break out 2-legged pullback for more down. But look how much overlapping it is. Same with FTSE, everything's overlapping. So it looks more like, you know, you sell and you have to sell higher, you buy and you buy lower. So you basically make your money on your second position, no matter how good it looks. DAX. Okay, so bear's getting a second leg down. But here's a bear spike. Here's a bear bar, didn't go below. This is going to be the first bear bar to create a sell. $15-minute chart. So is this going to be the sell signal for the bears? So I think it's a sell DAX, but it would be a sell with selling more above the bar, I think. It's just a bad environment for stop entries. But I think that's the swing sell potentially. Target would be somewhere, low of the day or lower third. I haven't done anything FTSE because it's just not really doing anything. So even though it's a swing sell, because it's a trading range, can overlap, can pull back strongly. So it's like you still keep a position to add on, either add on lower because it works or add on higher because it doesn't. Kind of a lower high MTR. Yeah, like a squeezed version. That's really good, mate, actually. If you can look at a trading range and instead of getting upset, kind of squeeze it in your mind and say, okay, well, we had a couple legs up, we broke a trend line, we tested and created a sell, then you'll start to see many patterns in the right place. But because the patterns don't look, perfect like a textbook, everyone just says, oh, you can't trade price action, it's nonsense, it doesn't work, it's all BS. But you've got to practice a lot to be able to squeeze it, your eyes and your brain. So that's why I think spike pullback, low 1, low 2 is a really good way to, or spike pullback, high 1, high 2. It's just a really good way to understand it. So first target is low of the day, but we know that DAX's range is about 70 points. We said on the daily, it's not a great place to buy. We probably need to trigger the sell or at least get to the close of yesterday or the low to see what's down there. So it's a really good entry bar. Really important in trading not to get upset. We scalped in FTSE and then we kind of missed all this and you're like, okay, we tried on DAX long and then, okay, you take a small loss, but then you just keep trying to get the swing. And because the swings are juicier, they'll pay for all the other stuff. So, So bears want a new low of the day. I think it was good that bulls got stuck here. 2 or 3 tries. Yeah, and if you can minimize the loss on it, so if you're happy just taking a small loss and going rather than your full loss each time, because the market very rarely just instantly runs your stop. So you've got time to say, you know what, man, this high 2 just isn't working. High 1s and low 1s should immediately move. Here immediately moves, comeback tests, goes. This one took off, overlapped, like it's just not doing what it should do. And if you practice that enough and you get a sense of, nah, it should have done something within 5 or 10 minutes, then you can just get out, get back to flat, and then reassess. Oh, g'day, Andrew. How are you? Not easy to stay short in this environment. I'm well, thanks. So DAX on my platform did not get a new low of the day. That low is 625. That low is 626. I'm well. Oh, where's my bar numbers? Let me switch back to bar numbers. So very strong entry bar and now looking like an inside bar. So as long as price doesn't come up to overlap that entry bar, the 1R target's down here, 2R target's down here. Oh, thanks, Andrew. Yeah, appreciate you saying that about the videos and the practice drill. I mean, glad you like them. They helped me a lot. I battled for so long. I lost so much money. I spent just so many years just losing. I was just a loser. Just, you know, and I'd be so happy when I won, but I'd also be stressed because I knew it was about to disappear. I just couldn't take good trades. And then I'd look at the chart and be like the greatest hindsight trader in the world. And you know, no one ever posts their losing trades, so you just assume everyone's a big hero. And yeah, it drove me bananas. But kind of turning a lot of hours material into something my brain could handle, like repetition, you know, like going to the gym, you know. If you want back muscles, you go and do chin-ups. Yeah, chin-ups suck. Yeah. That's why no one wants to do them. But it's like, if you can do the repetitions, it'll work. And so I just took that approach. So, and maybe that's my brain that can't process it. But that worked for me. I started seeing things as they were happening. You know, here's a spike. We're trying to get long on a high 1, failed, small loss. Then spike, low 2, sell. And so now we're in a short. And you just try and, you know, keep doing the right things. Oh, nice one. You know, I've got some really good feedback from people about that. It seems like a lot of people have that mentality. It's like, what can I rep? So I think that's cool. Possible wedge bottom on FTSE, but I mean, it's really making you sit through a lot today. I don't know why FTSE's so slow. If this is an inside bar, traders, you know, still short here. I think bears will try one more time to get a new low. If this is a big bull bar up here, then bears will exit at their entry. But I think the target's still below. The only thing that's bullish in my view here, if I can get shift to work, there we go, is it you know, sorry, now I'm thinking of FTSE. Let me take that back. Average range is about 170 points on DAX. This range is 70, so it needs to go 100 or, you know, a bit above, a bit below for the rest of the day. Oh, cheers, Anders. Yeah, much appreciated. So, I was saying before, yeah, I used to get upset. Like I used to take, you know, you try and take the high one and then it's a loss. And then you miss the entry and you take another loss. And then if you just kept following the procedure of looking for breakouts, pullbacks, and entering, then the next 2 or 3 would work. And so you would have ended with a plus on the day. But I just always got upset, always took it personal, like, you know, Michael Jordan in that documentary. I took it personally. You know, I used to just take it all personally. So if you're short, can you exit back at the close? Yeah, I mean, if you want to hang on to those profits, you can exit at that close. We never went above that bull bar. And if I was long and a bear bar closed on its low 1 tick away from my stop, would I add on to that position? No, I'd probably be like, okay, what I thought was about to happen ain't happening, and maybe the opposite is going to happen. I think bulls would like this to be a big buy zone. But, I mean, for the past hour or so, no one wanted to buy here. This buy didn't work. The buy underneath didn't work. This buy didn't work. I mean, how many times are you going to keep trying the buy setup? So I want to see what happens if we go below 20. This is also a new spike, so pullback and then a new sell signal, as long as it's not an inside bar. There's been a lot of second entries today. So spike, pullback. This one didn't trigger. This one did. Pullback, then this one worked. So FTSE's made a bit of a gap. I thought the target was down here, but I've missed the FTSE short. On the 15-minute chart on DAX, yeah, that's really common, hey, the really strong bear move, and then, you know, wedge bear flag, high double top. It's just it's a channel. Everyone's sold low and had a deep pullback. So when we get down to the lows, every newer trader sells down here. Everyone else says, okay, these guys just got trapped, so I don't want to sell there. I'm going to wait for a 50% pullback, or I'll wait and sell above that high. You know, I'll be patient to get into that trade. And the opposite, so the newer trader sells here, gets stuck. Newer trader buys here thinking it's a breakout and gets stuck. And it's like you take loss. It's not fun. So my alternative is assume the market is, you know, most of the time in a channel, which is buy low, sell high, and it doesn't matter where you enter, have one other bullet to either add on to the good ones or use it as an add-on if it goes against you to try and get out of it. Mate, I did it for years, seriously. I've got like hundreds of pages of trading days with, you know, it's like, were you trying to lose every trade because you hit your hit rates like as close to zero as it can get? They really need a bear bar here, you know. Yeah, it's like, you know what I mean? It's like impossible to get 100%, but it's also impossible to get 0%. Like you have to be doing the exact wrong thing at the right, you know. So another consecutive bear bar here. So I mean, 15-minute chart, I don't want to be long. Is this a two-legged pullback for more down? I mean, it could just come back and my profit could go to zero. But it's nice to hear that other traders go through that. And you're like, and I was in Telegram groups and Discords, and you know, I was buying signal services, and you know, I was paying hundreds of bucks a month to follow other people's trades, and I'd follow every one of them to the letter and still lose. And they would post like a big winning month, and you're like, man, you know, there was no gold trade. you know, it's like, oh yeah, I didn't post it, you know, I just traded it on the 1 minute, and it's just like such bollocks. But that's what I really love about Al's materials. It just makes it really simple. Like, you need a hit rate of 60% plus, and you need your average winner bigger than your average loser, right? You need your biggest winner bigger than your biggest loser. Like, you got to get the stats right, and stop trying to look for 70%, 80%, 90%. It doesn't happen. You don't need it. If you can get it, it's great. 70% is great. If you can get 80%, that's probably short term, but you need to take losses. And if a trader's not taking any losses, they're probably scalping. So, you know, you're selling for 1 point, but it goes 10. You know, you buy for 2 points, it goes 20. So your hit rate's mad, but you'll sit there just watching the market go in that direction. So I think there's a certain element of your hit rates can be too high. What happened to the bears? Did everyone in Europe start selling FTSE instead of DAX? What's going on? Bears are like, yeah, not in the mood. Mate, it seems like it. What, don't tell me we're going to get 3 inside bars. Are you for real? Do we not see much EU Forex trading live? I don't know. I'm sure if you typed it into YouTube, there's probably some guys that trade it. I know GJ gets traded live a lot. I mean, GJ moves a lot, so that's probably going to be more entertaining. You know, if I was a YouTuber trying to get money from views as opposed to trading, I'd trade GJ. It's really easy to lose a lot of points as well. So, but yeah, not sure. I mean, it's really liquid, and I mean, I like futures because it has like an opening time and a closing time, and it gives a bit of structure. Okay, so another bull bar. So not technically an inside bar, but I'm not going to buy above 22. So I'm short, so the buy would be to exit, but I may as well just hang on and... That's not good for FTSE bears. Can you buy above 22 for a wedge? I mean, buy signals haven't been doing great, but it's just closed a gap. So it's probably a buy and buy lower. You know, you buy here, you buy a measured move down. See, they haven't had to scale in yet. Alternatively, in a channel, you sell above a bear bar, you buy below bull bars. So that's the alternative. It's funny, I did a couple of those Spartan races on the weekend. It was just like about an hour away outside of Taipei, and me and my girlfriend went and did those races, and people are like, oh, what do you do? And sometimes when I say trader, people have a weird way to respond to it. They don't just go like, oh, that's cool. And so now I just say waiter. And like, you're a waiter? And like, yeah, I mean, trading is waiting. You're basically sitting around waiting for stuff to set up. If you want a job where you click the mouse button a lot, I mean, I'd go and play video games, but it's a lot of doing. You know what I mean? And but if you lose concentration, you go make a cup of tea, you know, you get your yoga mat out and you're having a stretch, and then you miss that trade, then you're gonna wait for an hour and a half. You're safe jobless. Yeah, right? Whenever I'm like, oh, I'm a trader, and they yeah, it gets weird. It either gets into like a crypto bro conversation, or yeah, they just assume you don't work very hard, you make so much money, it's ridiculous, and you're like, man, I'll probably put in more hours than like all of you combined right now. Oh, session disconnected. Oh, that's all right, it's open on my Mac. Let's get rid of that. Yeah, that's the first question. No one cares about the job. You know, anyone else like, oh, how'd you get into that? And oh, that sounds good. And oh, that's interesting. Like, you know. But I just met someone. Like, I'm not going to disclose like financial details. Like, I don't know. Maybe it's a cultural thing. In Chinese cultures, it's like the first question they ask. They're like, how much money do you make? Are you married? You know. And if you're like, say no, they're like, oh, I know a girl you can get connected to. Like, yeah, it's funny. In Australia, we don't do that. Oh, can the Bears get a second leg? So this range is too small for a whole day, but you know, the 1R target is down here. "15-minute bears all in short, probably. I suppose we technically need to go below that on the 15-minute chart. On the 5-minute chart, we're all in short. That's a swing point, we broke it. That's an inside bar, it's another leg, we broke it. But it needs to do more. Oh, thanks, NB. Yeah, I need to get on a regular schedule to set these up. I'll try and alternate them with the US ones, because we're coming into daylight savings for me, so it'll be like a 10:30 p.m. start, and I will be pretty average as a trader at 1:30 in the morning. I'll have no edge left. So I'd like to do some more Euro sessions where I'll be a little bit fresher. Okay, well, spike, and it's a low one, sell below 23. You know, you're basically selling below a double bottom, betting the range is going to break. Alternatively, you know, can you buy below 23 with a wide stop? It's probably, if you're doing that, you're trading the daily chart. You know, you're buying here and probably buying more at the low of the daily chart, betting it's going to overlap. I don't think that's a good idea. So we're triggering a sell below 23. So if you're short, can you add on below 23? I think you can. I think in this environment, you probably wait for it to go like a bit more below. On the 15-minute chart, we've also triggered a stop entry. So yeah, awesome, MB. Because I think there's a lot of traders who trade Euro, and because Brooks Trading Course book price action you know, there's two websites, you know, for the course and the trading room. It's a little bit more difficult to set up kind of changes to that. So if we can run a European session that way, we'll do it through Brooks, I mean, we use GoToMeeting, which is a bit old school, but, you know, it works, so. So we're coming to that 1R target, and if you were short here, your target's down there. So 2R of that first entry and 1R of that entry is, you know, 19,570 odd. It's also 40 points below 18. So if this is a trading range day on DAX, the market often respects, you know, 20 points, 40 points. 60, don't know, 80 it does. Similar to in ES, how it's, you know, 5 points, 10 points, 20 points. I want to take some off at that price, and it's missed me by a tick, which is classic trading range. Or did I just measure it wrong? That's another possibility. Getting a second hourly bar. Well, I won't scalp out. I'll just stay in it. Oh, hi Fritz. DAX is like 20, 40, 80. Sometimes when it's going hardcore, it goes up to 100. But if you use a tool like this, so if you can download TradingView for free. I've got this thing called a bar range calc, and so what this does is you can put your levels in. So you can see at the moment we're kind of just hovering around 20, but you know, when it gets up to 40, these kind of days will go, they'll go hard. And so you've got to be careful that you get your sizing right. And that means that if you've got a stop, you don't really want that stop one bar range away necessarily, because you probably just, you know, the pullback just takes you out and then it keeps going. So this is a good way to get your sizing right. Say, okay, well, each bar is 20 points. If I'm taking a sell, my stop's got to be at least 40 points away. If I want to add on a position, then that's probably another 40 points worth of risk. You know, so you're just trading a bit smaller than you think you can. But what do we do as newer traders? We trade like the maximum size the account and margin will allow, and then you get out of the smallest profit because you can't handle it going against you, and you're scaling into losses, saying, I can't close it. I can't accept this loss. Can't deal with it. Okay, so consecutive bear bars, we've broken out below that range. So we're on a low 2 here or a low 1 there. Bulls probably will try and overlap this. Do you have to get out at 1R? No, usually you want to wait and see what it does at that target. I mean, if this becomes a big bull bar all the way up here, then, you know, if we come back to there, everyone will get out at 1R, right? Sometimes it comes all the way back to your entry, and you just got to take it on the chin and be like, oh, well, that's a bit unusual. Good looking low 2 short on the 60-minute. I think... Atomic, did you say that a bit earlier? Yeah, low 2 bear flag. So this is bad news for bulls. You know, I call this the Albrook special. You know, big bull bars closing above the moving average, big bear bars closing away from the moving average. These, you know, that's just an hour classic. They've got a good hit rate, and they generally give you a chance to get out with a smaller loss. So if you can, it helps to trade like a micro position. So if instead of trading FDAX, you've got FDXM, which is €5 a point, or FDXS, which is €1 a point. It's handy to trade, you know, 4, 5, 6 micros, because then you can, you know, take 1 off here or take 2 off here, or, you know, you can enter with 3 and then add 3. A little bit more flexibility. Seems like on ES, everyone just goes for 1 mini. I mean, you can't scale in. You don't get the practice of scaling in and out. So. Usually when you watch someone on YouTube, they just record the winner, but, you know, it was good to see earlier, you know, tried to do something on FTSE, took a scalp above 2, and then I wanted a low 1 sell, but 14 was too big, and then sideways, so I didn't do anything, and then we bought above 8, and I thought about scaling in to get back to break even, which is what a lot of traders did, but I just took the exit below 11 and thought, okay, that's not how a high one operates. High ones take off and go sideways. They don't immediately reverse below that signal. So this could be one of those times where it just collapses, which is what ES did last night. You know, it's not the best high one, but this is what you want to avoid sitting in and scaling into. So I don't care if I take smaller losses, because I'm trying to avoid being in that trade. So we're still short DAX, about 50 points plus. So I mean, if you have to do anything to adjust your trade, you can move your stop to break even. Nifty daily chart. Let's use. Let's use FTSE. Let's make that the hourly chart. So what I would do if I'm trading the daily chart, which is what your question's based on, I go up 1 time frame, and then I'm also going to go down a time frame. So we'll look at ETH, RTH. So on the higher time frame chart, this is a bull channel. Oh, g'day Richard, thanks for jumping on. So this is a bull channel. It's had a couple of legs up, strong bear bar with a little bit of follow through, and we're back at the moving average. So this is one of those times where most of the charts you'll see, this will fail, become a buy signal and go above the high. Occasionally, this fails in a very strong way and works its way down here. So in general, I think this is a 50-50 trade on the weekly chart. If anything, that's the last swing point. We're about to break it. So if I'm a bear and I'm looking to trade this, if you sell there, it's 50-50 each way. Really what you want is breaking a trend line, breaking a swing point, pulling back up into the range. So now I've got a smaller risk and a bigger reward. That's usually the better way to trade a low probability setup. The high probability setup is to say, well, bulls are going to buy below bull spikes. So they buy here 24/7, buy more at 24, and betting that we're going to overlap that moving average. And that is a high probability trade. So that's on the weekly chart. If we go down a time frame, all right, but that means you've got to be in that trade for a long time, which might not suit. What about this? Well, this is a strong bear spike. So you look at that and think, well, sorry, bulls, this is probably going to be a spike and channel. Like, who wants to buy this high too? Not I, right? Here's a high two, triggers, bang, immediately fails. So that's a sign of a bad high two, whereas here's a high two above a bear bar that works. You know what I mean? This is how high twos operate. Bang, see, just trend continuation, bang, bang, bang. This is like, please be a high two, but it doesn't work. So can you sell below this bear bar? Well, I think you only sell below this bear bar if you're comfortable for it to come back and let those traders out. Where's your stop? Your stop's probably, I wouldn't use this one. I would use that one. It's tricky because your target is now a bit too far away. I would prefer, if that's a good sell signal, for wait for it to pull up into it to get the sell. You see how like the 1-to-1 is here? If you tighten the stop to the max possible, okay, so then you need it to trigger and pull back into it to get your 1-to-1. So it's like, I think this is broken. I think that's the next support layer. This is a bear spike and channel, so we'll probably get there. But I still don't want to sell below a bull bar here unless it's doing more of this stuff. But definitely, you know, 3 bear bars below the moving average, 3 bear bars, 2 bear bars. Buying is for a scalp, and, you know, buying below, not going to be fun. Better to be sell and save some ammo to sell higher. And that's channel trading. You sell, and if it goes to target, hey, great. Otherwise, you sell and you wait to sell higher. So that's what I'd probably do on Nifty. So DAX testing that low one sell, so totally normal. If 26.27 comes up into this bar, when it comes back to 23, those traders might get out. So those traders have got 1-to-1. Traders want the next move, but there's been no low ones. This was a pullback, second signal work. Pullback, second signal work. So yeah, no worries. Yeah, that channel trading, I think, is going to help traders a lot. I want to do some more stuff on channel trading. Which is, I never traded that way. I was always trading it like it was the world's strongest breakout, and I always just got smoked. Okay, let's have a look. Oh, g'day, Brian. If you run out of things to look at, you take a high-level look at CL. CL is in a tight trading range. Well, it's at 70. 70 is the magic number, right? Like, if you couldn't see these numbers, we are oscillating right in the middle of, like, look at this triangle. It's just absolutely squeezing itself into 70 flat. So I think it's Andrew who does the CL report, and he's been his weekend report every week. He does so well because it's like it's hard to do a report on a tight trading range because you like almost have to contradict yourself every time you make a sentence. But he's flow and he writes it so well. I'm not very good describing a tight trading range on FTSE and DAX. I'm like, you could buy, but it's probably going to go sideways. You could sell, probably go sideways. So your question is, yeah, breakout mode, follow through, and the breakout's probably going to fail. So if you're trading a trading range, you take this sell, but you're taking that sell with the premise of taking the next sell signal. And if you look at a trading range, basically wherever a sell triggers, we come back to it. Sell triggers, you come back to it. A buy triggers here, we'll probably come back to it. Buy here, came back to it. Sell here, came back to it. And that's, but you've got to be able to sit through this. So I wouldn't trade it unless you want to sit by your terminal waiting to do what you need to do to make money on that. So yeah, so daily, so I wouldn't even trade the daily chart if I was looking at that instrument. I'd look at maybe another chart. Oof, hourly's pretty nasty as well. What happens on ES is the distance it goes away from these magnets is often important. So, here we go down 1%, for example. So traders they buy lower to get back, or they do the opposite, they sell. That's probably 0.5% or something. Yeah, 0.5%. So they sell 0.5%, they sell more at 1%. They basically play back to support. Now, I don't like trading that way because there's going to be a day, and because that's maths, where you are going to be doing that and it turns into a very strong something, and you're going to be confident of like, yeah, I'll just keep doing that, that's going to work. It works until it doesn't, and there's 10 or 20% of days that it doesn't, and you're going to lose loads on those ones. So you look at a tight trading range on ES, and like you can measure this out on ES all the time. Where's these have been a bit too climactic. So these are days that are going to punish you for doing that. But here's the open of the day. So 10 points, 9 or 10 points down. Yeah, 10 points down, traders buy. 10 points down, they sell. But they'll also sell 15 points, 20 points. They just bet that we're going to come back to this range. Here, what was it? 5 points probably. But then what happens when it does this? Uh-oh. You've sold at 5 points, 10 points, 15 and 20 points. What do? You what happens when when you're here? You know what I mean? You have to have a back-tested strategy that says, I am 3 or 4 positions underwater. I need to buy the close. And hope that this is not a failed breakout and you take another loss. So it's brutal. That was CL. So sorry, Brian. Tight trading range, 70 is the magnet. So if it's away from 70, the trade's probably back to it. Yeah, promise never to do it again. UKX 3 minutes. UKX 3 minutes. Okay, so UKX 3 minute chart. I mean, we're heading down to my target, but we're doing a small pullback trend. Looks like today's the good day for low twos. Seems like every low two is going to work. Bar 31. Sorry, that's today. Bar 31, mate, trade of the day. No, I wouldn't sell below 31 just because of 30. Even though you look back and go, mate, that was the trade of the day. But it's a sign. Okay, so if I'm doing my breakout drill, that's the breakout and I'm looking for a sell signal. Whenever you're looking at two breakouts, there are the base of that spike. So this is a bull spike, we should go up there. If we go below that spike, this should become a measured move down, okay? So what I do instead is say, okay, rather than selling up here, that's good. That's the best possible sell if it works. What I'll do is, my target's here. As long as I get a sell somewhere in this top half or top third, then for me, that's exactly the same trade. Because everyone that's selling up here is selling to break that spike. But 30, because it triggered above 30, see how we went back to the close? So usually when you get good bull bars above the moving average, good bear bars below, every time you trigger them, you have to go sideways again. So I'm not very good at taking these aggressive sells. I'm not very good at selling these ones either. 4 bull bars, selling below 70 is a bad idea, even though if you held it, it was great. So I think it's like a 1-2 punch. I think we spoke about it the other day, Richard. It's like I want to sell. I don't want to sell that. But at some point, if we keep having bear bars, I just need to hit sell. The further this gets away from my stop, the smaller my size will be. But as long as it's in this swing area, okay, because this could go down and come back to your entry and be like, oh, didn't work. But what I used to do is wait for the strong breakout until it's like definitely going to my target, and then you sell this stuff here. So you got 2 lots of risk, 1 reward, and out of 10 trades, a lot of these just reverse. So, hopefully that was helpful. Oh yes, go. Okay, well it looks like we might get a 2R. Happy days. If I was a regular YouTuber person, I'd just cut this trade and be like, we only traded once today and it was 2R. Oh, those guys are so ridiculous. But the views on those videos are crazy. There's 1 million views on if you see this bar, buy it. 98% winning strategy. It's just nonsense. But I mean, what they don't tell you is, I was long above 8, so the skill I think is to give up on that and get short below 18, or wait for something breakout clear 23. Same kind of trade, spike pullback sell, spike pullback sell. Now we've had spike pullback sell for 27. This is the 3rd time that's happened. This one's not as reliable. Made 1 million views. I know, it's crazy. I did, to be fair, I bought a course on trading the daily chart, trading hammers and whatever the opposite of a hammer is, whatever this one is. Whenever there's a doji, this is your signal bar, I lost so much money trading that way. And his own trade reviews were nonsense as well. It was it could be a signal here, unless we go up here and then it's a signal here, or it goes up here and then the signal's up there. It's or it's in a bull trend and you should probably stop selling. How much money did you lose on this trade? Shorting a weekly gold bull trend, it was just crazy. But then I'm the muppet because I kept buying the subscription, so whatever. Just as an aside, I met a guy who owns a hedge fund here at the gym. We were just on the treadmill and chatting and talking about trading. And he said that all his traders that work for him have done at least 10 different courses before they found one that suited their personality. So Yeah. So I found OWLs. It was too difficult. I went and found all these other courses and then came back to OWLs. So, I mean, that's the stats work. So, you know, go and explore what else might work. Well, that was a tremendous trade. That was a tremendous trade. So thank you if you did jump on that. If not, you can watch me muck around with how high I thought price was going to go up there, which it did not. But then switch into short. So happy days. Atomic, you were right on the low 2. So the question was, you can see the low 2. You know, can you just follow what it's doing? So there we go. That's probably nearly 100 points. I'm out at my target anyway, so it's not quite that, but happy days. So always a new strategy every day. Yeah, those guys are always like, oh no, I didn't do that today. I did something else. So when I do a NinjaTrader video, it's clearly you can see playback. So I've got it on micros and I've got it on playback. You know what I mean? So I'm not pretending it's live, but the lengths people go to try and like pretend this is a live trade that just always works is it's pretty shameful. Anyway, whatever. We carry on. So I might close up the stream. We've been smashing it. Thank you very much for listening. We tried to get short FTSE, but I wasn't feeling the vibe, even though selling above 2 where I sold was the trade of the day. Yeah, but it doesn't matter because I wasn't sitting in it for it swinging down. But switching to DAX was good. And, you know, the short summary of that DAX trade was following the daily chart. So I posted a video on it today as well. Is yesterday a good signal bar? No, no one wants to buy above that bar. If anything, it's a short. So when we open in the middle of that bar, you've got to ask yourself, is that the best place to buy in the world? Or is the next place traders want to buy somewhere lower? And that's going to prevent you from getting sucked in up here, even though I did get sucked in up here. I was quick to exit and not scale in. So the LOM, was that low of the month? Is that what LOM is? Yeah, thanks everyone. Couldn't shake the early loss mentally and didn't see the obvious. Man, that's super common though. Oh, I didn't see the limit order. Yeah, yeah. So that, in order to do that's tricky. I think the advantage I have is because I trade the same trades over and over again. Let me just get rid of everything. That if I take a high one that doesn't work and we do this, I'm quick to no longer buy. And that should be a magnet to come back and test. And I said at the time, some traders are going to buy above 16 just to get there. But I'm going to let it go because even though, you know, 70% of the time you'll make your 10 points or whatever, sometimes it's better to be flat for this stuff. And just happened to be on the stream that this was a potential low too. And so I thought anyone that was long is going to stop scaling in to get out. And I happened to be right. But 19 could have just kept going like this. So yeah, and that's tough. You know, you have an early loss and then the next trade's got to be a big one. And you won't accept scalping in a limit order market anymore because you want to cover that loss. So bit of practice. So it looked like it's going to go down to measured move, but I'm going to wrap it up. Hey, thanks very much. Really appreciate it. Got any questions? Feel free to shoot me a note on Discord. You just find me in the Brooks Trading Room. I'm in blue, Tim F. And I'll see you. I'm doing a live session on Thursday for ES, so I'll catch you then. Thanks, everyone. Cheers.